Welcome to Trends with Benefits, a podcast by Van Eck with a forward-looking perspective. We explore new ways of thinking about the markets, investing, work, and life. Here's your host, Ed Lopez.
So Calvin, have you been watching the news and the headlines about all of this Roth IRA stuff? And, the Roth IRA is getting a lot of press these days, but particularly with these billionaires that have actually taken advantage of it.
Yeah, and I think that's how much of our tax code is going to be, is that, they have the expertise. No, they have the means to hire the expertise to find the loopholes in these types of programs. And I think that is part of the challenge that is in our country, is that there are some folk who have means and access to not just do what's at the surface level, but really bring on those experts to help put them in the best possible financial position. It's harder to change the tax code than it is to bring this type of information to the masses. And that's what we hope to do, to kind of level the playing field a bit more than that.
It's my pleasure to welcome Calvin Williams, Jr., founder and CEO of Freeman Capital. He's also named to the Investment News 40 Under 40 for 2021. And congratulations for that, Calvin. And it's going to be great to speak with you.
Oh, yeah, no, thanks for inviting me to this platform and community that you have built. I'm excited for today's conversation, so I'm ready to dive in.
Awesome. So we have plans to talk a little bit about entrepreneurship, because you have experience with that, and building a wealth management practice, as well as the topic of the day and your mission and your company's mission, which is closing the wealth gap in America and helping overlooked people build wealth with confidence. And I really love that last phrase, building wealth with confidence. What does that look like to you? What does that mean to you?
Yeah, one of the things that we learned, we conducted one of the largest private millennial wealth studies in the country. We surveyed 4,000 people. Is that often there's this paradigm of, it's just those who have lower incomes that don't know what to do and aren't confident with their finances. But the reality is that coming out of this study is that we found out that there are engineers, there are doctors who are very proficient in their profession, but then when it comes to their finances, they're skittish. They're concerned they don't have the confidence to move and build wealth. And really, when you look at building wealth, it is a match of having the knowledge and then having the confidence to execute on that knowledge. And we at Freeman Capital help folks to get both, make it super simple, and then put them in a position to increase their net worth.
So you started Freeman Capital when, 2015, is that right?
Yeah, the first iteration of it came out in 2015, correct.
Oh, the first iteration.
Yeah, it's a journey. So yeah, I think that what really led me to start it was my own personal experience. I had done quote unquote what the books say you're supposed to do. I went to college. I even came out of college and I bought my first house at 20. I was investing in my own IRA when I was 16. So my dad helped me to set it up. So I had done the right things, right? And then I even exited a company by selling my shares to my co-founder. And to me, I felt like I was doing the right steps. But then when I went to try and find a wealth manager, it was very clear that there are levels in this wealth game, and I was not there. And so he politely but directly was like, my minimum is $1 million, and I can't help you if you don't have $8 million. And that is what led me to figure out, how can we create a way, focus on wealth building? Because the wealth management industry is focused on managing what's already there. But the problem for most of us here in the US, we're trying to figure out how to build more wealth. And so that's what Freeman Capital is centered on. It's like, how can we give folk 2 to 3 easy recommendations at a time that will result in their net worth going up so that they can build it and they get to a higher position? That's a very different methodology than just management and maintaining a low risk tolerance. So that's really what led us to do that. And then the way that we work is through a hybrid model. We are remote, fully online. We have an automated platform that folks can use, but we know how intimate and personal finances are. They're an expression of our emotions. And that's why we connect them with our financial planners who can work with them one-on-one at their schedule to help them dig deeper, plan out more and take more steps forward.
So you mentioned getting started, and part of the motivation was selling a prior business. What kind of business was that?
Yeah, so it was a web development company. So I've been a geek like my whole life. I mean, I was recruited at 17 by the Department of Defense, building computer programs. So I've been in technology my whole life. And then coming out of that, I was in college and I began to build websites and web apps, and it just kind of grew up from there. I try and dibble dabble a bit, but I am nowhere near as proficient in coding as I used to be.
And I don't suppose you can tell me anything about what you did for the Department of Defense.
Well, I can, but then I would have to kill you, and let's not even worry about that.
Oh yeah, we wouldn't want that. Yeah, but that is fascinating. Before we move on from that, totally. But was there anything from that experience that I mean, you got recruited pretty young. Was there anything from that experience that influences your thinking, your philosophy today in business and life?
Yeah, so I think that it really showed me how interconnected our whole world is. It's so easy to live within our own spheres, be it in our community or our state even. But that exposure at such a young age showed me how the world is truly interconnected. And it just built on that with the internet. It was Web 2.0 at that time, which is a big thing. And then kind of with globalization, like you just continue to see how we are truly playing in a global environment. And that was probably one of the biggest things that I learned, was that even no matter if you're, in Idaho or North Carolina or Michigan, you can reach and impact people that are all over the world.
So you sold that business 2011. Realized you still didn't have enough money that traditional wealth managers would take you on. So you decided to start your own wealth management company. How was that? Had you had any experience in financial services before? And how did you overcome just getting started?
Yeah, so there's a wonderful thing about being naive, is that you aren't fearful of what's on the other side, So, well, I can do this. It can't be that hard. But I mean, it's kind of the beauty of life. Now, there was one stop before I launched this company where I was working at Lincoln Financial. I was recruited there to be one of their directors, helping to set up and manage their digital project management office. So that gave me some intimate exposure, and not just in the industry, but then how the industry was operating in a digital environment and in a digital world. And then leaving there, I was thinking, okay, how do I solve this problem? And really, I was like, oh, you just, pass a test, then you can form a company, and then you can start to serve and go on from there. So that's really how it started in 2015, was I just naively just thought, well, let me just get my series test. So I sat for a number of those, passed them, and then I formed the entity, and then we rolled on from there. But the thing that I learned in those first few years was just the importance of how much regulation can or cannot impact a growing industry and business. It was a wonderful learning experience, but yes, it literally was just like, oh, what's the base requirements you guys need me to get registered and pass the test? I can do that. And then you get into a whole new world. Then I had to surround myself with experts, advisors, and team members who have been doing it for decades to really help out with the core investment management methodology and the planning methodology. And I learned the importance of building a great team and then stepping back and having a vision that they can step into and then execute on.
In your business, who do you target and how do you market to them?
The people that we are trying to help. It comes through two ways. There's a direct to the consumer part, and then we partner with businesses to help reach that end consumer. When we're targeting the customer directly, the folks who we're going to help, they are regular folks. I mean, they're making 50 to 200K, in income. They're, living in most of the time a metropolitan, but really most importantly is that they have a passion and a desire to take a step forward for their family. And that's even where the name comes from in terms of Freeman. It's a throwback to my great-grandparents. They were able to buy their own home and another house during segregation in DC. And they weren't millionaires, but just that mentality of I want to take the next step forward for my life and for my kids. Those are the types of folks that we like to help out because they're willing to make the changes to build wealth. So we, of course, work and try and find those folks directly. And then we partner with financial institutions, with banks, with financial advisors and influencers to help reach those same types of people so that it can be easier for them to get access to this information. Because unfortunately, most of the time, most middle-class folks don't have wealth managers calling them up saying, hey, let me help you make more money. And we want to help solve that problem to put them in the best position they can be to win.
And you talked about partnering with other parties, other institutions. What does that look like?
It looks a couple of ways. The first way, which is for us, because of our core philosophy, we aren't so focused on if the Freeman name is out there or if someone else is. And so there are some folk who can, private label our service with their own branding and, messaging on top. And then others who can partner with Freeman Capital and then get a percentage of the revenue ongoing from the customers that they send us. And so we try and make it flexible to make it be the best fit for our partners, those who might want to be out front with their own financial planning, solution in partnership with us, and then those who are happy to just build an audience and then hand them off to an SEC financial advisor.
What are some of the wealth building practices that some people just don't understand that might help some others?
A lot of our folks come to us and they are trying to build wealth as their primarily. And so they're doing things like they're investing. It could be, of course, like I said, on Robinhood, which is blown up in popularity. It could be through a crypto. But as many studies have shown, for the average person, day trading does not yield profit. What we do is that we have this methodology that starts off, and I'm just going to say like the first three foundational steps. We have folks who come to us who are already in a place of investing, but have gaps in their wealth journey. And what that means is that it's things like their emergency fund is either not where it should be or not at all. And having a savings account that you can look at and know that no matter what, I'll be all right. It helps to reduce stress, to give you confidence to take more steps. So that's a big foundational part that we focus on for all of our customers to kind of build that emergency fund. Then second is there are many people who are investing, which on average, you'll get a 12% return in the stock market over time with interest rate on their credit cards that's 18, 20%. And the number one way to invest is in yourself first. And so we help folks to prioritize, build a plan to pay off their debts faster and more efficiently. And then a massive thing is that unfortunately, so many people are not taking advantage of free money from their job in the form of a 401k match. And many people either don't know how or don't understand what the impact will be on their cash flow when they make that contribution to their 401k. So we help them work through that part, get that free money. And just in those three steps, building up your emergency fund, paying off your debts in a proper, efficient manner, and then getting free money from your job, those three steps will put people in a place that will increase their net worth just by following those directions. And then we get far more personalized and goal-based as we go forward from there.
Do you work with other entrepreneurs or other small business owners?
Oh, yes, several.
Do you find it hard sometimes with them? Because sometimes they have so much invested in their own company, they don't want to.
So it's a interesting thing is that they have so much invested in their company that I think that they're beginning to realize that they're over leveraged. To get it going, you have to go all in, as you know well, right? But once it's up and running a little bit, then you got to begin to pull things off the table and begin to say that. So we help them balance when and how to do that and still not put a detriment to that business's cash flow and growth, but ensure that their personal financial stakes are well. Because it's so interesting how we can become our business brand and like we are unified in one, but in reality, that business is a separate entity. You have to take care of it and take care of yourself as well. We help people just to see that and then plan for that so that they can be in the best position that they can be in.
What do you think that financial companies can do to make finance and investing more inclusive?
This is our main theory, is that for us, it's not about making it inclusive because the context of making something inclusive feels like it's a social good. Like, oh, let's just include everyone, we'll feel good. And this country has proved one thing above all, is that it is economically motivated, all right? So let's not think about social good. There is a social good, but let's not focus on that. Let's focus on the capital good in servicing what are large populations of folks who have money and are not getting the service that they need. And I think of it as mass personalization. There's already mass personalization with marketing. You can go to Facebook, you go to a thing, we've all done it. You go to a checkout, you don't check all the way out, you go anywhere else on the web, that ad pops up because they personalize that ad for your behavior. So we're doing mass personalization and mass targeting on the marketing side. We now need to have products and financial products that are also personalized for the people that they are servicing. In my opinion, for the next generation of financial companies to thrive, they have to not just personalize their marketing, but then personalize the end product to meet that customer's needs specifically.
And I figure with technology today, that could be done much more easily than it has been in the past to be able to provide that targeted experience.
Yeah, I mean, there is still a bit of a heavy lift that has to happen like around identifying, building, and then providing the service. But yes, I mean, that's what Freeman Capital is working toward, that vision of where every person gets their own personalized wealth journey, because all of our situations are different. Some have 2 kids, 3 kids, none. Some want to be a nomad. Some want to live in a house forever. But then you're going to sell every person the same product? That doesn't even make sense. This next step is what companies like Freeman Capital are taking, so that the customer can get what they really need and want, and not just a blanket approach.
I feel like we're seeing more traditional tech companies enter the financial realm, whether it's crypto or just automated technologies and what have you. What do you think about that? Will that make things easier for people? Do you think they'll find regulations too onerous to follow through?
Yeah, so I don't think that the regulation is going to be too much of a hurdle, because the goal of regulation is to protect the consumer, and we need that. There's full stop. You got to have that, especially when you're dealing with new consumers. You need to protect them. But I do think that trend is going to continue. I think that, as there's a saying that technology is eating the world. As it continues to move through each industry, it's looking for inefficiencies and opportunities to provide a more personalized and custom experience. And so I am undoubtedly confident that there are going to continue to be more hardcore tech firms moving into financial services through partnerships or through just rolling out their own platforms, because it only makes sense as they look at their customer and how can I provide all of the value that my customers need to cement our relationship with this customer. I mean, it is the world and time that we are living in, and I see it only accelerating.
I was just kind of curious because you had talked about clients that might have exposure to crypto, and given your background in programming and technology, what's your take on the crypto landscape or Bitcoin and some of those options?
Yeah, so I think that one, I look at them in 2 lenses. One, as pure technology, and then 2, if it's an investment. There are opportunities to disrupt how money is moved. And that at its core was one of the values of a number of these crypto coins in the beginning, was a more efficient way of moving money from place to place, right? And so we see that technology at its core is working. Then the other question is in terms of them being an investment. And this is not investment recommendations, it's just my own personal thoughts. I think that depending on the true application of a crypto coin determines the long-term investment outlook of that coin. Now, there are some that are just pump and dumps to where you have a Dogecoin or whatever that are popping up where there is no other value than the intrinsic value that people put into it. And for those, I don't know how long they will survive. Can someone make a buck off of it? Perhaps, as long as someone's going to buy behind you. But that's a more risky investment. I personally like the crypto coins that have a tie back to the real world. Like there are some coins where it was tied back to solar powered farming. As more farms use this technology to transmit data, the value of the coin went up. And so for me, when I see a coin that ties back to real world application and value, that is something where I personally would take a deeper look at. I am bullish on crypto as a whole, but it may or may not meet everyone's investment criteria on if it's a good fit. And that's why it's so important to have someone to work with one-on-one who can bounce these ideas off of. But there are a number of clients who have, a small percentage of their portfolio in crypto. For those who want to invest in it, we just like to make sure that that's in the same vein as like day trading. So just manage your overall portfolio, have some long-term wealth things. And if you want to day trade and take high risk with something that may not be regulated, that is something that you can do. But, it is our goal to just get folks back to the highest probable way to get them to build wealth. And if folks need to or want to play in that space, please do it. But, like all things, do it responsibly.
In terms of closing the wealth gap for people, investing the right way and making sure they have the right resources, how much does the government play in that? How big of a role does the government play in closing the wealth gap?
This is a crazy idea, but, not one that is probably too far off. But like you look at retirement contributions. Once pensions went away, then the government gave us citizens a incentive tax break if we make contributions to our retirement. They did a policy change that now drives all of our behavior to put money in our retirement fund because it lowers our taxes and it can grow tax-free. So the government had a policy that's impacting all of our behavior. It's the same thing with the wealth gap. Yes, there are some people who are like, we should just pass out money. I don't know if that would ever pass, like reparations or things like that. But I do think that if the country and the policymakers that represent its citizens want to, there are other incentives to drive value that can close the wealth gap. In my personal point of view, if the government wanted to step in, one way that it could do it is doing those types of tax changes where if this behavior that would trickle down and show wealth growth in these communities, if that can be incentivized, that is one way of doing it. But then there are still those folks who are making less than probably like 35, 40K, where some folks just do need help, just straight up help to get to a position where they can have more cash flow to put it to work. So it's kind of in two ways that I would love if the government would incentivize us as a community to do the behaviors that would be good for everyone and help to close that gap. And then there are some folk who are underbanked and that the government just has to step in just to help because there isn't enough economic incentive for a for-profit entity to drop down there, serve that demographic in a ethical way and grow.
Now, so some of the people that are underbanked I guess underbanked, maybe some people have a skepticism towards the traditional banking community. I don't know if you have any thoughts about what the financial community can do to overcome that or help those people join the system.
Yeah. So, and one, just so we're all on the same page, I just want to define those two words. So like the unbanked are people who literally don't have a bank account, like they literally don't have anything. And then you have the underbanked, people who do have a bank, but they're not being used to their fullest. So you can make 150K and be underbanked because your bank might not be servicing you the same level that it would someone else. So like underbanked, I believe, transcends income, and unbanked is more tied to income and them just not having a bank account. So with that as the context, I think that it is the responsibility of new companies to step in and try and close those gaps. Because if the older companies were going to close those gaps, they would have been closed decades ago. There's no incentive for them to. So I live in reality with a positive outlook. So the reality is that big banks have not had the desire executed to serve these two communities because it was not economically viable with their current setup. But you bring new entrants into the markets with new business models like Freeman Capital with our monthly subscription service for financial planning, using technology that is targeted to serve those who are underserved. And so I do think that is the responsibility of the industry as a whole to try and solve these problems. But I don't think that they will because they haven't. It's just like when, my parents, like when I was a kid, if they didn't make me clean up my room every day, I wasn't going to do it. But they made me, so I did it. The way of making the system change is by having new entrants come in with a competitive advantage, show that we can turn an unprofitable customer into a profitable one and scale that. And now there is an incentive to serve a demographic that was otherwise overlooked.
Yeah, that's really well said. What would you say to, or what kind of advice would you give to entrepreneurs, somebody starting a new business?
So I would say that I would do a bit of the opposite of what I did. Don't be as naive as I was just diving in, right? Because, and mind you, I still took a whole year just to plan out the business. I did a market research study that took like 6, 7, 8 months. But still, I wish I would have taken even more time to plan and think things out, because there's so much that you don't know, and there is so much waste in being an entrepreneur because you're trying to figure it out. So I would challenge folks to do a series of small MVPs. I mean, spending no more than $2,000-$3,000 max on a prototype product and getting it out in front of as many people as you can, and just try from there. Because I think that I could have been farther along if I would have been a bit more patient. And it's really hard to be patient and be an entrepreneur, but that would have been the biggest thing that I probably would have said, because the reality is that entrepreneurs are visionaries. And really what we're doing is that we have a vision of something in the future. We're living now in the present. And then we're trying to build our product so that when the present catches up to our vision, we're ready. And a way to do that more optimized is to have a better plan and strategy. Then as the present is catching up to your vision, you'll be able to fully capitalize and be ready. Because that's, I mean, at my core, I feel like the successful companies are driven by leaders who can see what's coming in the future and then scurry as fast as they can to build it so that when the present catches up to that vision, they can seize the market and grow from there.
What's one long-term trend you see playing out over the next year or several years?
So the biggest trend that I see that unfortunately is kind of doomsdayish to a degree is that I see that the only thing stopping automation and AI from truly impacting many industries is regulation. But that's not in a bad way. I feel like our policymakers are trying to balance protecting citizens who could be out of work, who will have to retool, and the wave of technology that is coming. I see, a time in the next 20 to 30 years to where the government is going to have to step in major, because we saw with the stock market, companies during the pandemic were laying off people because of the pandemic, but earnings were up. That has not been forgotten by chief financial officers. They saw that travel was down, people weren't in the office as much, and profits were up. And so I think that plus this trend in automation is presenting a world in which it's going to be important that we all learn as much as we can around how technology is going to impact our specific industries, and then that our government step in to try and help people to retool, to learn as best as they can, and then for those who can't, support them as they go forward in life.
All right. So are you ready for our speed round, trend or fad?
Let's go.
All right. I think I might know the answer to this one, but micro influencers, trend or fad?
Trend.
Clubhouse, trend or fad?
Sorry to say it, fad.
I just read you no longer need an invite to join Clubhouse. So
that's why it's a fad, but that's a different conversation.
Post-lockdown optimism, trend or fad?
I'm going to say fad.
And then I think I might know the answer to this one too, but NFTs, trend or fad?
Trend.
Yeah. So yeah, I think NFTs are interesting. I mean, there's some faddish NFTs, right? But then I think the underlying technology
that's it. It's the tech. So like the way that I think about it, and for those who may not know, it's just a way of like signaling that this is original or a one of X. As more art becomes created online or through digital means, you need a way to certify that it is unique and yours. And to me, that underlying tech is critical. Now, are we going to have these $1 million NFTs for memes? I don't know about that, but the underlying technology is a trend.
Well, Calvin, this was awesome. Thank you very much for your time. What's the best way for people to follow you or learn more about you and your business?
Of course. Well, the business is easy. It's freemancapital.co. That's .co. And I'm on LinkedIn. It's Calvin Williams Jr. I generally come up first or second. And that's where I'm at the most, that and Instagram.
Thanks again, Calvin. This was great.
Thank you. Appreciate you having me.
And thank you for tuning in to another episode of Trends with Benefits.